Welcome back, guys. Thank you so much for being with us. My name is Rina Hicks. I'm the Operations Director at FIDA Investment Bank. And this is the Oak Special Fund videos where we just tell it like it is. And we're just breaking down our fact sheet and our performance for the first quarter of 2025. I'm here with Ian Kahangara, our Head of Global Markets and our Chief Investment Officer. Now, in our past video, which I would actually ask you to please go watch if this is the first time that you're joining, because we've broken down a few more things. We were talking about our asset classes and where we've invested. So the question that I left off was asking Ian was where we made money in first quarter 2025. So I want you to go back and just summarize again. Where did we make money in the first quarter in terms of asset classes?
Okay. Just a continuation to what we were discussing in our previous videos. One of the major places was the fixed income space, or what I can call as government bonds. That is one. Two, we still had a lot of holdings in high interest places, so-called deposits and fixed deposits, and that is another place that actually helped us yield quite a lot.
So that's interesting because it means then we locked those call deposits for a long period of time,
Yes.
but even when interest rates came down,
Yes.
we were still enjoying the high rates that we had locked in.
Yes, that is actually what happened. Beyond that, we still had a lot of trading going on. So we had a bit of currency trading, a bit of precious metal, especially on gold, and a few commodities, majorly oil, that was being traded on our systems. So that's another place that we actually made money. Less, not that it wasn't lucrative, but maybe there was less allocation, I would say, is where we have the US stocks and a bit of derivatives. Some derivatives were a bit large, but others skewed to equities were not as large as we would have wished. But maybe going forward, we'll have more allocation and see what it can bring forth. Yes.
Okay. So even as you share where we made money, did we lose money in any of the asset classes?
Yes, we lost a bit of money, but mostly on derivatives that were meant to hedge other assets. So there was a bit of a negative 2% overall from derivatives. I may call them derivatives for now.
What about the Eurobonds? You remember I was talking about just the way yields went up?
Yes.
Just when some announcements were made towards the end of March.
Yes.
Yeah.
Actually, what happened was we have a small holding on Eurobonds. So these are USD denominated bonds, which largely had made us money in terms of both the interest accrued and also some valuations. But as we came to the end of March, and that's why sometimes you'll find within a month there is behavioral change in terms of how income flows, we had a drastic announcement. First, there was the tariffs on the global space, which affected all sovereign bonds, if you look at Nigeria, Ghana, and Kenya. However, Kenya was particularly affected in a different way from the others, or more drastic, in terms of the yields rose. If you look at what we call the Eurobonds that are maturing for 2036 and 2048, we had levels initially of around 10.5% to 10.8%, and they went as far as actually reaching 12.8 to 13%. Then, but right now there's a bit of recovery. We've gone down to around 12, and some are going back to 11, largely based on news. And the news at that moment was the IMF deal that Kenya has with the funding from IMF and the window closing within this month of April. So those are some of the things that may affect drastically your holdings and your valuations.
Yeah.
Yes.
That's people usually ask, is there a risk? What is the risk that I would face if I invest in the fund? Those are the risks. Such pronouncements, political uncertainty, macroeconomic issues, just the uncertainty around what's going to happen with Kenya. Are we going to default on our debt? And, all these different things that are going on. The politics around that affects all financial assets. And so those are the risks that the fund faces. But the idea is to find ways to invest so that then we are mitigating that risk. And maybe you can just talk a little bit about that. Yes, there's a risk of losing money, what we call drawdowns, but how are you responding to some of these risks and, you know, all these pronouncements and executive orders that are affecting markets and therefore the potential returns that our clients could get?
Okay, one thing we always are looking forward to our target, which is 20%. Having 20% means that if you look at interest rate levels being at around 10%, we have to do something extra to give the extra push. Yeah. But for that extra push, it's a match between managing risk and return at the same time. So what we've done largely since inception is putting most of our cash in what we call safe investments. Safer investments or low risk investments, which usually attribute to about 70 to 80% are usually the low risk investments, such that even if rates really move against us, we don't have too much market risk. And these include the call deposits, the fixed deposits, the local government bonds. Maybe equities are classified as around medium, but majority of those, they are more stable. Less of that percentage, so we are talking about 15 to 25%, is taken to leveraged items. These are items that most likely you'll have to place a margin, or whatever you can trade is more than the value of what you've given out as collateral. And that helps us boost our return. But on the other side, we always say where there is leverage, it's a two-way sword. So it can cut both ways. It can help you in getting more, it can help you in losing more. And the way to mitigate that risk is how much you're trading, that is number one, and internal risk measures. Secondly, how you can hedge. So you can find in situation whereby we can be in certain trades and intentionally we go into derivatives. Some of the derivatives are options, which is a cost. At the end of the session, we'll say that we lost some money in derivatives. But what did we actually do? We were actually placing mitigation measures in case whatever we did on the other side goes bad, that you have a protection. So we are sometimes welcome losses, which are actually a cost, while mitigating other investment strategies. Yes.
Okay, thank you so much, Ian, for that detail. So now I want to go through a fund overview, especially for those who have never heard of the fund and you're wondering, oh, you said Oak Special Fund, who are you again? So again, Oak Special Fund is a kind of a unit trust that is licensed by the Capital Markets Authority in Kenya. And I'll just share a few details.